Priyankar Biswas is joining us for more on that. Priyankar, hi, great to have you on NDTV Profit, and what a great day to have this chat considering the kind of announcements that we've seen yesterday from the cabinet. Very clear capital goods infra play there. So let me begin, with your take and how you have viewed some of these announcements and the trickle-down effect and impact we could have on listed players.
Thanks for having me here. So we had actually highlighted, let's say, very recently when we had put out a report on L&T, like sometime before, that probably what is going to be the direction of the government going forward. And kind of, I would say, it sorts of plays out along that. So we had already seen that the key ministries, for example, the ministers have been retained, let's say the rail, road, etc. So what we are kind of anticipating, let's say, for example, we were not really positive on roads earlier, and because being an election year, then we expect a bump up on that in this current year, especially in the ordering. Similarly, in the railways, we expect a positivity with the dividend. Let's say the RBI is providing a lot of headroom for the capital good space to actually perform out there. So, of course, there are a lot of areas. So we have highlighted, especially in power and the other spaces, there is a strong pipeline, even for things like non-renewable side. Let's say, for example, thermal power, like based on our estimates, like 35 gigawatts of tender are there to be coming up in the next few years itself. I mean, based on the published pipeline. So in a sense, yes, I agree that we have a very strong line moving forward. So be it data centers or any even power transmission as well.
So let's go project by project, Priyankar, and let me start with Vadhavan, which is going to be, once completed, one of the top 10 largest ports in the world. Is going to be an offshore port, and obviously in Maharashtra, Palghar district, etc. First of all, do you see the timelines for this as being feasible and the kind of companies that will be involved? It's of course being led by JNPA, but the kind of private players that could also be involved.
So we had actually, when we had put out a thematic on the ports and logistics sector sometime in March of 2024, so we had actually discussed the potential of Vadhavan in that. So the issue that happens is JNPT is kind of almost congested, so as to speak. So today JNPT is doing something like a 7 million TUs plus, and there is a potential to expand it to maximum of, let's say, 10 million TUs. Then what do you do after that? So of course the Vadhavan decision makes rational sense. But having said that, we also have a track record of projects, let's say a Western DFC or something, which has taken a fairly long periods of time. So I would say that the project is definitely needed. And if we go by, let's say, the Vision 2030 or even the Vision 2047 maritime documents, clearly the government would want to go in a landlord sort of a model. So eventually the terminals, whatever comes up, will get privatized, essentially a private terminal operator. So that will follow, but honestly, very difficult to comment whether the timelines would be met. On the other hand, we are at the same time seeing interests from private players, let's say beyond Vadhavan. So, for example, JSW Infra, which we had highlighted in our more recent report, putting out a bid for Murbe, which is again quite close to Vadhavan actually as an alternate port. So those sort of developments are happening in the space.
Priyankar, good morning. Neeraj here. So I'm trying to now bring the investing in the markets angle to this as well, based on either the RFQs or the cabinet decisions or port development promises made by private players and the capacities of the players who execute some bit of those projects as well. Where is it that you believe the biggest bang for a buck over the next 3 to 5 years lies? Is it in pure play infra and construction companies, or is it in the pick and shovel suppliers, which might be, ancillaries to some of these projects? How do you view this pocket from an investing lens?
So from an investing lens, we have to see it both from, let's say, the growth prospect point of view, and let's say where essentially in the valuation heat map things stands out. So that's at least how we look at things. From that, what we say is that I would rather prefer, let's say, asset based models essentially. Like for instance, as I was just briefly highlighting just a while before, let's say for example, a JSW Infra type company. So they will typically be participant in this, let's say the port privatization angle, or rather I would say berth privatization angle. And we have seen this quite in play, let's say when they had taken up assets in Paradeep. So I won't be surprised, and we had put that out in our reports as well, that we would actually be betting on such players who, I mean, relative to, let's say, the industrial space would have a relatively fairer multiple. Of course, they have rallied as well. So even after that, I would say that it still makes sense. I mean, on that front. As far as, let's say, the capital goods point of view, there would be capital goods companies which would have some place in it, but I would say it would be fairly limited in that because a lot of the companies, let's say, or an Adani or, for example, a JSW, tends to do a lot of activities in-house, let's say.
Okay. Priyankar, what is the runway of growth? Sorry, one last question from mine. What is the runway of growth for some of these? Because a lot of times people tend to look at the rearview mirror and say, for example, L&T has gained so much in the recent past, can it do more? How long is the runway for growth for something like L&T?
Yes, so based on project pipelines that we have assessed across various sectors, I think for L&T, a 13% order inflow CAGR right up till FY30 is clearly doable. And that is assuming that they are able to maintain their win rate across various sectors at the same level as it is today. So we are not assuming any gains out of there. Given that the project sizes are becoming larger in a lot of spaces where the competition may probably be a bit lower, so the growth rate can even be higher than that. So I would say a 13% order inflow CAGR should be a reasonable estimate for, let's say, an L&T, let's say the core space. So this is, of course, a combination of both India and, let's say, the Middle East. We see actually growth being strong actually at the both ends. So one part is, of course, let's say the power transmission side of things, where in a total nutshell, we are expecting maybe close to 3 trillion rupees of capex in all. So that is required for integrating this 500 gigawatt of renewables that needs to be put into the system. Then we have the issue of peak power deficits suddenly cropping up. So in that sense, we have a capacity shortage in thermal. So government is speaking of 80 gigawatts of thermal power projects. And based on a prospect analysis, we have done around 36 gigawatt is visible right now
Right.
in terms of tendering pipeline. In case of renewables, we did a similar prospect analysis. 103 gigawatts of prospects are visible right now.
Got it.
So on a base of close to 200 gigawatt, you have a visibility of 100 just right away. So in a sense, this is a path that we are going through. Then in other spaces like data centers, for
Sure, sure,
example,
sure.
so like we
So
are slightly under 1
Priyankar, I'm
gigawatt.
sorry, I'm completely out of time. So just wondering if I can lay a number to that. You think the runway is there for the next 5 years at the very least?
Yes, so at the very least, at least till FY30 is how I will put it.
Okay, got it. Sorry, Priyankar, but completely out of time today. But we need to have a deeper conversation on this because you've written a fantastic note on Larsen and Toubro, amongst others, and would love to probe some of the finer points of something like that kind of work. But thanks for joining in today.